any of the notes that we were not live. So, all right. Well, we are now. So to catch everybody up to speed, we talked a little bit about Jackson's Hole and the fact that humans like to rubberneck at car wrecks. We're not exactly sure why. Now we're talking about the ES chart. So going back to the weekly, this is what I was talking about right here. This fair value gap that exists here on the weekly chart. The fact that we left this fair value gap behind 2 weeks later, probed down right to the bottom of it and then fired. And now it's acting as support. So I want to see, I think it's pretty important to see if, you know, where this weekly candle closes. If we close below this shaded box, then that would make me think that it's going to come down into this area potentially, which is 4281. The top of that previous weekly candle being 4257. That's not really what I'm expecting today, but obviously, or what I'm looking for, but obviously anything can happen. I think the possibility exists that we continue to close above this, and you know that's the other side, right? We close above this, maybe probe again, wick through it again, something like that. But that we continue to close above this and then ultimately make the move back up. Either of those possibilities exists. So like I said, I think it's important to see moving forward kind of where we close in relation to this. So now going to the daily, you can see that shaded box there and how these daily candles are forming, you know, right here at the top of this box. If we get candles that, you know, really start pushing us below this, you know, I think it can get messy. This is a 60-minute, and you can see on the 60-minute, this was the wick, right? Pulled just below and then popped back above. This was also at the midpoint of that parallel channel, one deviation down. I'm going to take a couple things off the chart here, but I just want to show Stonkington. Going to a 15-minute. I had this move. Let's go to a 5-minute. This move measured as the manipulation leg, and we came down to 4 deviations of that, right to the bottom of it. So there's a lot of stuff that lines up right here as to why this is holding as support. It's also a new week opening gap right in here. So you have that weekly fair value gap, previous new week opening gap. There's 4 deviations off that manipulation leg right there. So it makes sense that it's, you know, holding or at least trying to in here, right? Right now we've got this, and Hells, you had mentioned earlier that it made a lower low. The ES did not. And Q may have.
Yeah, I was trading the NQ last night till like 2 a.m. And it was the price action was very, very. It was bear flag after bear flag, sell, bear flag, sell, and then about 2-ish, it made its low, and then it fired off of that, and it hasn't really looked back. Definitely. Well, it's tough price action. It really, really is. Because some of these little bounces that you're looking at, if you're not looking at the right time frame, it'd be like, oh no, that's a bullish setup, when ultimately it's just another bear flag being built out. Another bear, little pattern. So it's like watching these time frames become very, very important. Look, if you're playing a 1 minute or a 30-second chart and you're just scalpalicious, it's like cool. If you're trying to get in and get a good, you know, 30, 40, 50 point run, it's like you really need to be aware, because some of these flashback candles can be absolutely devastating, and they come out of nowhere in a lot of ways. And even some of these bear flags, they keep on crawling up and up and up. And I think Stonkington and I have talked about a million different times, the most risingest wedgish bear flagish thing ever. And then soon enough, it's like, okay, so now what? because it just keeps on waddling up. Very, very, it's tough. It's like, and I don't want to go on too much longer. And I'll say this: it's like I'm going to be so happy when this speech is over, and so happy to look at flow with a clean eye going into next week and towards the end of the year.
Yeah. All right. And the point you made about timeframes, absolutely can't, couldn't agree more. Mr. T calls that time distortion. When you have, you get in here, like this is a 15-minute, and you get in here looking at these candles, right? Filling in this 15-minute fair value gap, and you get this probe down into it and then bounce, probe down into it, bounce, probe down into it, and then ultimately, makes the move higher. This stuff in here, if you're not looking at a longer time frame, and this occurs on all time frames, right? But if you're not looking at the higher time frames and you're just looking at like a 1 minute or a 3 minute, you might be looking at this move down going, okay, we're going to break, and then it just bounces. And if you don't zoom out to a 15-minute, you're like, what's going on? Then you're just cussing it because you get a couple of candles up and then down and then some up and then down, right? But if you zoom out to the 15-minute, it's like, yeah, it's bouncing in the same spot. It's not ready to go yet, right?
And the other thing is that I'll just mention with this, it's like these past several days, these candles that we're getting, they're like times 5 to 10. As far as, so last week, what could have been like, a little 5-10 point run is now a 20-30 point run. Which, it's like if you're trying to mark your buy zones and your stops, it's like it becomes very, very difficult to do that, not only within options tradings with on the equities, but with futures also. It's like what could have been, it's like, oh, I'll set my stop like, 5, 10, 20 points down. Now it's like that's a half candle on some of these. The way they're throwing it up, which it becomes very, very, that's why entry is so important when you have this massive volatility and the range that we have. Rec shop is available for everybody.
Yep. All right. So the last thing I'm going to say here is on the 60-minute, we've got at the moment, right? If you look at this, it's like we had this what looked like inverse head and shoulders bottom here, right? And this fair value gap that was left behind held here, right? All in through here, that held. I think, again, this shaded box, I think closing above or below that, I think is important. Not just today, but, even going into early next week, we want to stay above it if we're going to make that move higher. But, this fair value gap after making this low, this in here has held. So I think, if we start getting candles, back down in that 43.65 and below range, still have these relative equal lows hanging out here at 43.67. But again, that would be something that I'd want to see this kind of action where, okay, maybe it takes that and then pops right back up. Because if we start closing candles down in here again, it can get real ugly real fast. In the same sentence, it's like, okay, this was that regular trading hours gap that we came down into it and filled and fired off of and then sold through, and now we're right up against that. Right? So keys for me, like I want to see it get above 44.10 to have a chance to come fill some of this stuff in, right? Whether that happens, again, maybe it's today, maybe it's next week, whatever it is. Getting some candles closing above 44.10, I think, opens the door to come back in and fill in some of this, some of these candles that we got to the downside. Getting candles closing below 43.67.25 opens the door to 43.50, and then maybe a 618 test, 43.40 half. So that's kind of the scenario I think that we've got in front of us, and this is how I'm looking at it. I was just talking about the time distortion thing here. Pay attention to that in here as well, because if we continue to probe this area and pull back, and maybe it pulls down, comes back up and probes this area and cannot get through it, and then comes down and makes a lower low, I'd be looking for another probe into that area to try to ride it short.
Yeah. And a lot of it is going to be determined by how the market interprets the words come out of his mouth. So higher for longer, is that already priced in and we can stabilize and start crawling back up? Sure. Is the messaging super hawkish? We go lower. I don't think there's any question about that. It's like how the walk away is. So it's like, thank you for pointing those levels out, Bender. That gives us a range to understand. So thank you.
Yep.
What you got there? Anything else?
Nope.
Stonk, what you got, buddy?
I got some stuff. I'm ready. Let's see. We got some good stuff we can look at today. Gonna get the screen share going.
Oops.
All right, there we go. All right. So trend days. This was the topic of conversation yesterday. And we've got some good examples. I was kind of putting in the room measured moves. So I like to watch the NASDAQ. So, and Bender on the ES has told us about 10 handle pullbacks. So I wanted to do some back testing yesterday about what we can maybe reasonably expect, because I want to be looking for trend days. I want to catch trend days. Where can I buy pullbacks with confidence? So I started measuring some of these pullback moves so that we can be aware when we see a move of what type of trending price action we might be seeing. So and this is a great time to do this because we have the trend day from, Wednesday up, and a trend day from Thursday down. So I started measuring some of these moves in here on the bullish trend day. So let's see, we had this move here and down. Do this, it's a little bit more focused on what we're actually looking at here. So that little pullback move right there, that's just under 30 points. Then if we go up to this pullback here, from there to there, that one was 56 points. And then there to there, this was 49 points. So I was dropping in the room yesterday. Around 50 appears to be, we were seeing 50-point corrections yesterday as well. And so if you think about a trend day, it's like 50 points on the NASDAQ is $1,000 on one contract. I don't know if anyone's out there thinking they're going to sit around and let a trade go $1,000 against them without doing anything. Just like Hell said, right? You got to pick your entries, you got to pick your exits, right? I don't want to sit in a trade that goes $1,000 against me. So measuring these moves, we can look again really quick at the ones from yesterday. This candle, this little retracement here, 49.5 points. That little pullback there. And then we had the bigger ones down here. We had, this one was 100, or pretty close to it, 96. That pulled that correction. And then when we had this next one, that was going to be here to here. Again, we came close. This was 42. So when we start, because I'm looking for trend days, I want to be able to buy or sell pullbacks and be confident that we're going to continue back in this direction. So as we start to, when we start moving in one direction, these are going to be things that I'm going to be looking for and calling out in the room, just to line up with historical data that we could be looking for. When we get into this 30 to 50 point range for retracements, these are going to be things I'll be calling out in the room for these reasons, just based on, and hopefully I'll get a chance to do some more back testing on that kind of stuff. So
yeah, man, I think that one of the biggest challenges that people have is our trend days. Is the whole less is more type philosophy, and I think that's there's always something to be learned. So thank you for walking through that, Stonk. What else you got, man?
yeah, let's take a look. So we'll start up with the clean chart, see what I'm kind of looking at as we come into today. So similar to how Bender presented the ES, here's the monthly, the NASDAQ. And so this is the fair value gap that I've been talking about here. We would want to be, we're looking, if you're bullish, we would not want to see it close on the monthly candle. So we've got less than a week to go, right? So we wouldn't want to see the close below this 14,742. That would be a bear signal, and then potentially we'd be looking down to our next monthly gap, which has room all the way down through there. In terms of, and then next I would want to take a look here at the daily. So we had some interesting setups that invalidated some of these ICT concepts in terms of what I was expecting to see for some of these fair value gaps here. This was the first one. So if we look before we had, the NVIDIA pop and all this, which obviously there's other factors in play that may impact candles to not react the same way we'd usually expect. So we had this candle close above this fair value gap, which made me think we would use this as support, which for the moment we are doing. So I'll be watching to make sure we continue to hold above 14,802.75. But there was also this fair value gap here. And when we got this big green candle that closed above, I would have thought, okay, well, maybe we would use this area now as support, which yesterday's price action sliced right through. So, it's obviously like any system's not 100% perfection, but and we have a lot of other external factors at play at the moment. So for now, the focus will be here, making sure this continues to hold, basically, or watching for that continue to hold. And then again, that 14,802.75 for next week. So we can swap over to a chart that has all the markup here. And I'm looking at a 4-hour. So orange box is that big monthly gap. Tiny gold in here is the daily fair value gap. So we caught the bottom of it and bounced. For upside, this would be an upside target on the 4-hour, which would fill in this gap here on this last sell. And then we've got all this basically above is who got left behind on the sell yesterday. I marked up this line as well, see if this was a repeat important line, and then it flipped as resistance. So I'll be interested to see if we can get up here, what will happen up at that 15,200, 15,201 area. So that's kind of what we got here on the NASDAQ. We jump over to the Russell real quick, go through this one a little bit faster. We saw this bear flag yesterday, mentioned pre-market. We fell out of the bottom of it, and this purple line still in play, 1852.40. We filled this fair value gap above, so if we're going to push down, I'll be looking again for this reaction there. If we can, kind of, if the bear flag's done and we can keep pushing to the upside, we've got this weekly fair value gap above. So first thing I'd be looking for above would be the reaction to, you can see that it's been reacting this 1879.30. So we'll see what we get there. Individual tickers. Let's keep an eye on AMD. Let's see. So for downside, you're looking at 100 flat psychological round number that it has reacted to in the past. if we're going to go up, I'll be watching 103.45 on AMD. Had some reactions here in the past as well. Trading View kind of messing up with my trend lines here, but so there we go. That's AMD. Check out Apple real quick. Apple Battle of the Dark Pools. So above we've got 177.25. That's a big one from the end of May, 14%. And then below would be watching this 175.10 area, just a fib I had, and then we can get into some dark pools that I will call out in the room if we get below that. So that's all I have.
So yeah, I will say this: Apple has, in a lot of ways, dictated the market. The past several sessions when Apple was strong and we were pounding over 180, 181. It's like that was definitely leading the market. And it was commentary during the day here in the Roadhouse that if Apple were to give out, God help us all. Yesterday, Apple gave out, was down over 4 points, I believe. And that literally, was a big part of that accelerated move down. If you look at the Apple chart towards the end of the day, it was just a slow and methodical sell. What we didn't get, it was a lot of Apple flow to kind of show direction, nor did we get a lot of Microsoft flow yesterday either. So when you're not getting flow coming out of the two biggest names that carry the largest weight, it makes it a very difficult day, at least from the standpoint of how I like to trade. Coming into today and post-Powell, Apple flow is going to be very important. Are we back hitting 180 calls for next week? Are we back to doing that? Or are we going to be shooting for sub 170s going out a couple of weeks as far as the flow coming in? Same concept with Microsoft. Same concept with Amazon. Of the tickers that I saw yesterday, as far as flow, that was leaning ever so slightly bullish, and I'll just talk about that because that was the least amount that you could say. So we'll focus on the least. Tesla had bullish flow coming through, more bullish than not. Let's just call it that. Amazon, they kept on trying to buy Amazon. They kept on trying to buy Tesla. They kept on trying to buy Google. Very little attempt to buy Meta. Ulta had some decent activity coming through. That's another name that had some decent activity. And I did see some sporadic pops back into yen, YINN, as far as dip buyers there. Disney also had a handful of people trying to buy the dip yesterday. So just because they're trying to buy the dip, which we saw in flow throughout the day yesterday, doesn't mean that we get the immediate move. I strongly encourage that if you're looking to try to, even if it where you would normally try to play out a week, week in advance, 2 weeks in advance, try to play out a little bit further, try to play a month, try to play out the next year in some ways to give yourself some stability in what you're doing, because this volatility will whoop you. The lesson that I want to give with that, what we're also seeing is deep in the money calls and puts, short-term expiration, because they're not willing, the big players are not willing to get whipped around by the volatility in the IB. Like they're buying almost, neutral contracts for the most part, as much as they can get within range to be able to play because of the volatility that exists. So these are some observations that I've had that I took a little bit of time to think about yesterday coming in today. I hope they help you. Bender, Stonkington, thank you so much for walking us through everything. We have a general idea. Catalyst is Powell. Price action after Powell. That is absolutely everything at this point. Anything else, boys?
Nope, not for me.
Nope.
No?
Nothing
All right.
else.
Let's do our best to have a good, clean day. Yeah, Friday. We'll see you soon.
See you shortly.